Today we're going to be doing our trade recap. We're going to be going over the trades from last week. So we're going to be looking at the 11th, the 12th, and the 15th. Let's get into it. Okay, here we go. Our trade position was taken on the 1 minute chart. So we took liquidity, right? Session open, we start selling off heavy. We start breaking structure coming into after market opens. We start taking out highs. We get imbalance right here. We go ahead and give ourselves a fair value gap right here. And it's exactly where we ticked our entry, guys. So we ticked our entry, um, got in right there, no stop loss, sniped it. We sniped our entry. We're able to run all the way to these highs, right, made at market open. But price also continued to run higher and take out other areas of liquidity. But that was our trade, and you already know when I win for the day, I'm done trading for the day. So that's the only trade we took on Monday the 11th. Then rest of our other trades were on the S&P. So we went ahead and took a trade on the 12th at market open again. So here it was kind of different. I'm pretty sure this was, yep, some form of news. So this big candle right here, since we're on this 1 minute chart, we took our trade from the 1 minute chart as well. So yeah, so same pretty much concept. We ran these highs over here, took liquidity, right? Because liquidity rests at highs and lows. Started breaking structure to the downside. And at this point, we're just looking for an entry, right? So we're breaking structure. We're breaking structure to the downside. We get a fair value gap right here. And we go ahead and enter our fair value gap, targeting liquidity right there, right? I traded 1 to 1.5. Our entry was kind of higher. There it goes, something like right there. So I was good at getting out right here. If you tried to hold this trade any longer, you could see it would not have worked out. But I was in and out 1 to 1.5, like how I'm supposed to based on my system. So yeah, that was the trade for the S&P. Guys, as you can start to see, you can start to tell it's a lot of the same stuff. The charts don't look the same, yes, but the concepts and everything that we're applying is the same. We're looking for the same type of confluences to take our positions. Now, can there be more to what I'm doing? Possibly, right? Because I'm looking for other things as well. But when it comes down to how I'm entering my positions, it just comes down to the confluences that I'm showing y'all. So obviously, context is important. How do you get your context? By understanding how market moves, by experience and stuff like that, right? Back testing, knowing your model, knowing how you choose to approach the market. Our last trade was on the 15th, the Friday, ending our Friday off with a win. So no better feeling, right? So market opens 8:30. As y'all know, and y'all should know by now, I only trade New York Session Open on ESNNQ. So pretty much same overall type of situation, but here we just start crashing. We form SMTs at these highs coming into pre-market, right? Coming into market open. So we're forming SMTs showing that price wants to continue bearish order flow. We start pushing aggressively in the sell direction, right? So at first, I didn't know if we were going to have an entry on this Friday because of how much we were displacing and just tanking, right? But we went ahead and found ourselves a good fair value gap. We used some other confluences to find this fair value gap too. So it's not like we just picked a random fair value gap. No. We've used some other confluences to find this fair value gap. Went ahead and got it on the retrace, got out of 1 to 1.5, like my system. So got out of 1 to 1.5, and that was it. No stress, no hassle. These positions only lasted like at most 5 minutes, and we were out, right? That's how I like to trade. I like to keep it simple, I like to keep it effective. So as y'all can see, most of the stuff is just understanding how where liquidity rests, looking for price to take liquidity, provide imbalances in which we're going to take our positions from. And that's pretty much it, guys. So, not pretty much it, but like that's a good gist of what's happening. I don't know why I'm getting these ads. I'm not turning off my ad blocker. TradingView, chill out. But yeah, anyway, so I know y'all see the new crib in the background. We might do a little crib tour or whatever, but if not, Yeah, guys, just a little trade recap. Hopefully, trading goes great this week as well. We can hop back up and show y'all some more analysis of trade positions. But a little tip for y'all: make sure y'all have y'all. If you're a beginner, you need a TradingView account. You should already have one. You should be paper trading on your TradingView account. Um, what other tips do I have for y'all? Y'all, you need to also forward test as much as you back test. That's one thing I will say. A lot of people get wrapped up in back testing, spending hours and hours on the chart, but you got to understand experience is invaluable, and you can't get experience from back testing because things aren't moving, there's no emotions, you get to choose your positions and stuff like that, right? But when it comes to forward testing, even if you're paper trading, you're experiencing candle movements, you're making decisions as stuff is printing, and that is invaluable knowledge to you, right? It's invaluable experience. So you make sure you forward test as much as you back test. And yeah, guys, let's just keep trading and just keep scaling this shit. So yeah, peace out.